What's up?
Good. I'm good. How are you?
Great. Shout out to accountability.
Whoa. What was that?
I said shout out to accountability, not justice. Accountability. Shout out.
Yeah, I got that part, but I'm like, yo, was that a sip to that? Like, I missed the whole inaugural, and you did it again. Like, wait a minute, we're not even in sync.
We're not. Get yours out, yo. What are you drinking though? Water, H2O.
Of course. What are you
drinking?
What are you drinking?
Thanks for asking. Oh, this ain't nothing but a little lemon chiffon. A little refreshing lemon citrus situation in a cup.
What is that called again?
Lemon chiffon.
Oh.
It's artisanal. I made it myself and it's delicious.
Oh, you think you fancy. Yo, I do have to say something.
Yeah, please do.
Ladies and gentlemen, we got him. All right. What's up, everybody? I am Mark Monroe. Oh, are we going to toast to this?
We have to because, the country, come on now.
Yes.
Yes.
Right. So, wow, we actually have somebody come like, yo, it is now officially a competition. Like Reggie, Vic are no longer safe at the top.
Yo, what's going on, y'all?
Yo, people are on this notification. Shout out to you. I think it's Peter.
Let me look.
It's Peter.
Mine, I came in late, so it's not going to show the person.
It's okay. Shout outs to Peter. He was the first person here in the chat. So, salute to you.
Hey, Peter.
But what's good, everybody? I am Mark Monroe, accompanied by my wonderful co-host, co-producer, and of course, good friend, the wonderful
Dylan GC in the place to be. What's good, y'all?
Oh man, it's been quite the week so far. Like we've been seeing a lot of stuff taking place. So honestly, I feel like today is going to be kind of interesting because we're now getting into earnings season.
Yes.
And so we're going to start seeing a lot of activity take place.
Okay.
So I feel like it's very fitting today that, we're going to talk about some of these whispers that we're hearing that kind of went a little bit quiet into the night.
Yo, they were quiet. Okay.
Shh, not a sound.
Right, I was just about to say that.
Yo, so we got to do that. But, honestly, it's like, we got to get some simple housekeeping out of the way. If you haven't subscribed yet, go ahead and hit the subscribe button down below because we do produce a lot of dope content and there is some fire episode that's coming in the next set of weeks. I think we're going to have a new series that's coming out and then the breakdown comes back. I'm probably sure that Wealth Rituals makes it season 2.
No, it is. And it's long overdue because so many things have happened. I almost feel like it's old in a sense. But, it doesn't really matter because you just reactivate the stunt campaign. Not everybody saw it. You know what I'm saying? We got to give everyone the opportunity to participate in the stunt campaign. So it's all good.
I'm here for it. I got to work on getting my, I got to get a gauntlet. This hand seems a little empty. So, especially if we're going to be doing the stunt campaign. And I feel like there's going to be some things to stunt about in the coming weeks. If not, wait a minute. Next week? I think it's next week. My God. Yeah, I think it's next week.
All right. Well, hey.
Yeah, should be interesting. But if you haven't subscribed yet, go ahead and hit the subscribe button down below. We would totally appreciate having you a part of the family. Welcome to being one of the cousins, primos, or whatever it may be in your native tongue. So welcome. And if you've been here before, if you're already part of the family, welcome back. And then on top of that, if you like our content, if you think our videos are dope, apparently 2 people automatically disagree with that, but that's okay. Go ahead and hit that like button. we'd love to get this out to more people that are around the world because we're already international now. So we want to keep this going, keep the movement rising. So let's do it. And on top of that, if you want to be in the know or be one of the early folks that see the videos from when they post or when we go live, go ahead and hit the bell. So that way, you get that notification and you're here right along with us. So Jolene.
What's good?
I was going to ask you the same thing. Yo, what's good?
Tell you, it's not good. I'm gonna tell you that. It's not good. Yo,
Okay.
what's up, everyone? I'm Jolene GC, the place to be, and this is Trade Talk Tuesday. Let's get into this market. First of all, it's right across the board. That's number one.
Yeah.
It's right across the board. So we got the Dow at negative 256.33 points. S&P 500 is negative 28.32 points, and the NASDAQ is negative 128.50 points. The VIX has creeped up to 18.68 points, and the 10-year Treasury note is coming in at 1.59%. Heading over to sector performance, as you know, there are 11 sectors. We track the top 3 and the bottom 3 so we can see what that rotation looking like. And we have utilities, real estate, and consumer staples leading in the top. And then for the bottom 3, y'all, we got consumer discretionary, financials, and energy.
Where the bottom 3 again?
Consumer discretionary, financials, and energy.
Interesting.
Very. Okay, so then for pick performance, if you head over to our Instagram page, and you just scroll through, and that's at that come up series, you will find what we call our SIPs, aka our picks. Coming in at number 1, we have CRISPR, followed by MyScale Bay, Tesla, and Square. Those are the top 3. And then for the bottom 3, it's Boeing, Datadog, and SE, aka C Unlimited. So
that's interesting.
Yeah, this is the first time ever in come up history where there are no 52-week highs. But to be fair, there were so many last week.
Take a little breather.
Okay, yeah, it's okay. It's okay. But Mark, so
yes.
2 major things happen, and we need to get all up in it, including charts, including trash talking, including shade, all that. 2 major things. So that's y'all's focus for this episode. Those 2 major things.
I'm just lining them up on deck.
So the real question is, Mark, which one should we get into? Oh wait, oh my gosh.
We gotta do the history. We gotta do the history.
Yo, I be in the future. So let's bring it back to the past and talk about this Black history. Shout out to Brian Clayette, because seriously, the brother, he prepares. He prepares.
Yes.
So on this day in Black excellence, on April 20th, 1853, this is when Harriet Tubman, my girl, began her work on the Underground Railroad. So we don't know exactly like when she was born. She was born in 1822, but she died on March 10th of 1913. So when you think about it, well, it's really not that long ago.
But it's
when you think about it, it feels like that sometimes.
Yeah, but it's not that far away.
Yeah, so that's wow. Okay. And she was born under the name Araminta Ross. And she was one of America's leading abolitionists during the 19th century. And she is said to have started her work on the Underground Railroad on April 20th, 1853. She was born as an enslaved person in Maryland. She escaped slavery to lead hundreds of enslaved persons to freedom via the network of safe houses known as the Underground Railroad. So you all know how I feel about Harriet Tubman. I have her artwork in my home. Actually, it was a gift from 3 cousins. They're a trio, and right now, shout out to Erica, because Erica's the lead of the trio. And I when I got it, like y'all know, I was super weepy-eyed. So it's beautiful. I'll show a picture of it someday. I'll share the art collection with y'all someday. Anyway, now we're going to talk about Elijah McCoy. So on this day, April 19th, well, today's the 20th, but on April 19th, 1887, we're going to talk about Elijah McCoy, who invented the lubricator attachment for steam engines. He was born May 2nd, 1844 to October 10th, or he died October 10th, 1929, and he patented the lubricator attachment for steam engine trains on April 19th, 1887. This invention greatly changed the locomotive industry by allowing trains to be oiled while in motion. Prior to this invention, prior to this Black genius, trains had to be completely shut down for oil maintenance. Can you imagine? Can you even imagine? This invention saved the train industry a lot of time and money. McCoy patented 57 inventions primarily associated with the locomotive industry. Some of those patents not associated with the locomotive industry were for a lawn sprinkler. That's nice. Ironing board, designed for a rubber shoe heel, a buggy top support, and tread for tires. So
all the necessary things that we need
to propel us forward in all aspects, whether that be spiritually, mentally, emotionally, technologically. Like, hello. Shout out to Black genius all day, every day.
There it is. Oh, by the way, so one of the cousins said that they found Harriet's dad's house in Maryland.
Oh, wow. Do they have a picture or anything?
I don't know. If you do, go ahead and shoot that over to Jolene. I think it's at Jolene GC on Instagram. So
Jolene GC all over the internet.
Well, then there it is. And you can find at Jolene GC or at I am Mark Monroe. Send it to either one of us. And it's spelled the right way, Our names are spelled the right way. Any of these extra letters that you're seeing on social media, where you're seeing extra O's, extra E's, underscores, and everything else, no. And another way to look at it is, you can see exactly when our profiles were created, I think. So,
I don't know.
I know on Twitter you can. So, I've been around here for a minute. So, you ready?
I'm ready.
All right. So, what
do you want to do first?
Hey, I'm here for all the smoke. So, I know that, let's rock.
Okay, let's do Apple.
Okay. So today, Apple has had a phenomenal release, though that some folks would think about like, it's just a simple product release, which to a certain degree, that's true. There's something to also pay attention there. So for example, Apple came out with its next generation 4K TV, which I'm super duper psyched for, though that lets me know that now I have to upgrade all my Apple TVs in my house. So if you need an Apple TV, then I can always pass it along to you. So, because I don't believe in reselling, I just believe in giving away. So ultimately, I will be upgrading to the Apple TV because they came out with something that's super duper cool that honestly, a lot of folks didn't really pay attention to. And that was where now it's like, if you think about it, you no longer need to actually pay somebody, a technician. Now, remember this eye technologist, if you were watching if you read the Accenture Tech Vision 2021, where they talked about democratizing technology. Now, beforehand, if you bought like a big screen TV, 9 times out of 10, the TVs that you buy, they don't come calibrated. Now, what Apple allows you to do with that is they now allow you to use your iPhone to literally put up against the screen and it will calibrate the screen's color for you. Like, now normally you would pay $2,000 something to have a technician come and do that, and yet you don't have to do that. Just buy the Apple TV and it'll run you through that process. There's that part. That's a hidden part. The other part was that we talked about where it's the M1 chip that they now brought into not only just their MacBooks, but they've now put into their iMac lineup, and now they're putting into their iPad lineup. And the other cool part is that 12.9 inch iPad is getting an even bigger bump with the display technology, which now we're moving into the part where we're getting into this part with like this democratization of technology, where it's becoming more and more accessible to everybody, where, say, for example, with this micro LED technology that they use in their their monitors that they sold for thousands of dollars, and then on top of that, you had to buy the stand for $1,000 or something like that. Now it comes in your iPad, and now the iPad has become so powerful that it can now compete against really the MacBook or any other laptop that's out there in the market. So that's huge. I mean, that is significantly huge. And let's not forget about like the iMac. It should not be just like glanced upon or ran over. I mean, that had a major upgrade though that, you know, Tim Cook, if you're listening, you need to definitely take what I said. And I'm probably sure that MKBHD and I both agree.
Mm-hmm.
We would probably buy it if it was matte black. Just want to put that out there. If it's matte black, then it definitely has a chance. If it doesn't have matte black, then, you know. But shout outs to the folks in whom which that also got their pink, their Prince version of the iPhone, the purple.
Yes. Oh my
Shout outs
God.
to the Purple Rain iPhone that also made its appearance.
It's beautiful.
Are you gonna get it?
You know, I don't know. You know how I am about phones.
We'll
You
talk
know how
about
I
it.
am. Yeah.
But it's pretty cool in the sense of like what they're doing with the tech and also looking at like what they're doing with the AR. And the thing that really stole the show, that stole the entire show, was AirTags. Like those things, like if you really think about it, like what you can do with AirTags, it's like, it had me thinking. Like, so AirTags is like pretty much a device in which that Apple has put in a chip where you can actually like find whatever you've left behind. So whether it's keys, you know, another device, suitcase, backpack, purse, whatever it may be. And essentially it can literally navigate you to the device. So just imagine if somebody ever steals something that's of yours and it's actually like, I'm probably sure that they're going to add that same technology where you can actually locate it with other devices. So just in case if somebody just takes the tag off. But just imagine if you have a dog or some type of pet, you no longer have to like implant them with a microchip. You can just put it on their the AirTag literally can become their actual animal tag. And then from there, you can actually locate and navigate directly to your pet. So I was actually thinking about that, and that's pretty cool. So, and then just thinking about where we're going with AR, if Tim Cook ever decides that he would like to share with us these glasses,
I know, I'm waiting.
that would be huge because now you can just bring all that same technology that we're seeing with an iPhone and with the other devices and integration. It automatically comes through. And I was actually talking with other folks earlier where I said, just also imagine this. Imagine the fact that if, you know, Apple, they've already started working with healthcare, like for example, insurance companies. Well, just imagine what that looks like if they're also working on with vision for insurance and then also embedding that. And then we've already know that their glass technology has already been patented for self-correcting. So essentially you would just tell Apple what your vision is, and then it just self-corrects itself to adjust to your vision.
Man, see, you know, Cook, if you need a spokesperson for that, you know, just holler at your girl. But you know what? I feel like if they could put all that technology into the AirTag, so then I don't have to get like Apple glasses. I can just have my own glasses and attach like something small or something, or they can embed it in the lens.
I think that they will. I think that the AirTags will, like that U chip technology that they're using. I think that that's going to go across the entire ecosystem of products because it's very low cost. And for some folks out there, it's like, you know, there's other companies out there called Tile, and then you also have Samsung that came out with theirs. Well, the difference between that is that Tile is not like fully integrated. It doesn't have the full integration of what you bring in with the Apple ecosystem. So that automatically pulls that out. So then you also have Samsung, in which that honestly, it pings across other Samsung phones. And I think that honestly, it's like a part of me just doesn't quite trust that because of the fact that, you know, honestly, Google isn't very good as it pertains to keeping everything encrypted. Mm-hmm. So
that's a problem. That's a problem. But you know what I appreciate about Apple? One of the things that I think Tim said it actually, that stood out was, he said, if it was him, somebody from Apple said, high performance ecosystem. And that phrase right there is so magical. It is so magical. It like lays the blueprint down for everything that Apple has been doing and will, you know, hopefully continue to do. And I'm super excited about that.
I just want to know whoever does their words, their marketing of words. The cousins are in the chat, like talking about, like, say goodbye to cheaters. Like,
I can't. I'm glad to not see that. Oh my gosh. That's hilarious. Oh, I see Calvin cheating finished. I can't. That's hilarious.
It's becoming a whole new world. So, I mean, honestly, I'm like really, really excited. And I think that honestly, that Apple could have released a lot of this during their June 8th event. I think it's June 8th for WWDC, which stands for Worldwide Developer Conference, where for anybody that doesn't know what these conferences are about, a lot of your companies, they have conferences where they unveil technology. So you'll have this massive keynote where it's like everybody gets excited. And then throughout the week, it's really for developers. So that way they can get, like, for new developers and existing developers that build on their ecosystems or build across their platforms, where it really supports them. So that way they can get fully embedded to know what's coming down the pipeline, what's new. So that way, as they develop, it's like they're prepared. So for me, I've been using, iOS 14.5 beta, because my firm Red Eye Studio definitely does a lot of software development and projects. So we always like to stay adept to what the new groundbreaking technologies are. So that way, essentially, we can design better for projects. And of course, we're all just tech geeks at our firm, of course. So it's like, those are the things in which that, like, it's a developer's dream. So honestly, it's like for consumer or investors, it also gives you a glimpse of where they're thinking as it pertains to the future and what you can expect coming down the pipeline over the next 6 to 12 months. And really, it's very interesting. A lot of your Wall Street analysts, they pay attention. They pay very, very close attention to this. So in looking at today's announcement, though that it's news now, the biggest news is essentially exactly how do all these things start to integrate with existing as well as new things that are coming down the pipeline. So I would definitely say, stay tuned. And honestly, Dan Ives, his projection definitely sounds pretty significant now, especially when you look at the price point of, if you have, let's say if you have 1 billion users, but then let's say that you have maybe out of that 1 billion, let's just take 100 million of those users, buy those tags at $100.
Mm-hmm. That's a lot.
That's crazy.
Mm-hmm. Wow. So,
that's
okay.
Let alone that's not even including like the Apple TV, which I'm hugely excited for, more of the content that they have coming down the pipeline. Hopefully they can get more content though.
We have some cousins talking about ship that Apple TV to New Jersey, FYI.
We may have to do a raffle for it, and I may just autograph it. So,
oh Lord, oh Lord. You guys know that I have Mark's autograph on file.
We're not going to talk.
I'm not going to do anything evil with it. I promise. Is it Scout's honor? I don't even know what it is, but I won't do it. I won't. Okay, so if we talk about all these exciting things that are happening for Apple, and they announced some pretty big things now, and we have the WDC coming up.
Yep.
I mean, what do you think they're going to talk about then? What do you think they're going to drop? And then also, like, let's talk about how this translates to our portfolios.
That's a good point. So I'll answer all of that.
Yeah.
So here's the thing. When looking at Apple, like today, here's the thing to know about Apple. Apple has a release in September. They released their major product in September, which is the iPhone. That's their prized possession, their biggest selling jewel to the company. Mm-hmm. They released software and maybe one more thing at the event, possibly, maybe even 2 more things, because Apple, newsflash, those glasses and the car. You're on the clock. It's time. And then on top of that, we also have like the early event. So they typically have really 3 events throughout the year that are major that you can always expect throughout the year, like earnings. Mm-hmm. You know that they'll have their spring event. You know that they'll have their developer conference. And then you know that they'll have their major product reveal come September/October, which it releases, and which that hey, this is when we unveiled the iPhone. So iPhone unveils in the fall, iPad and all those things like the lower hanging fruit items, they release in the spring, and then software comes out along with like pretty much ecosystem and platform is in the summer. So that's kind of like how you look at it. Now, looking forward, here's what I project for Apple's earnings upcoming.
26 p.m.
6:26 p.m. 4/20, 2021. Pacific Standard Time. And don't worry, I am completely coherent, completely sober when I'm telling you these predictions.
That's hilarious.
I predict that probably we're going to see Apple report about 100 billion again in revenue. So I think that their Q2 is going to be a significant blockbuster. I think that that's going to be like, we saw like everybody on Wall Street was expecting $100 billion revenue quarter last quarter. But I think that that's going to be a repeat again this coming quarter for Apple. And then I think that, we'll kind of have that swell of like, okay, hey, that lull period over the next quarter. And then, of course, we build back up for the second half. I think that ultimately what we're also going to see is still a rise. This is where we actually get to fully see that second, like to see if that service revenue is here to stay. So essentially like the Apple One service where it's like it gives you like $10, $20 or $30 for a family plan where you get all the services a la carte. I think that that's going to be very, very telling to see exactly where we are with Apple. And on top of that, here's another thing. We were hearing whispers about Peloton making Apple, available there. So like playing within the ecosystem. So, you never know. But I would say, like, honestly, I would expect another $100 billion revenue quarter. I think that they're going to probably smash it on their EPS. I think that their guidance may come in maybe a little bit light to sandbag. But all in all, I think that, we're pretty much on par and trajectory for, probably another 20 to 25% run up going for the rest of the year for Apple.
20 to 25% run up. Okay.
Yeah. Not on earnings day. I'm just saying over the year. So I think that ultimately, like, Dan kind of like let the cat out of the bag where it's like you have your company's guidance, then you have, Wall Street consensus, and then you have what is called the whisper number. And the whisper number is pretty much the number in which that, okay, hey, we kind of expect for you to do this beat of, top and bottom line in revenue and EPS and, other things. But then it's like there's this other number where it's just like, okay, we kind of like suspected that you kind of like sandbagged or underbid. So this is really where we're going to set it. This is where the real benchmark is. Now, we saw that with Tesla where they completely annihilated the whisper number, which was, I think, 174 and came out with 184,000. Mm-hmm. So essentially, you could be seeing the same thing play out with Apple because we see that their revenue was pretty strong. So there's that. Yes.
Okay, so I mean, I don't know about everyone else, but I'm pretty excited about where and what Apple is up to and what they got going on in the world.
Yes, I'm excited. Yes.
Okay, so do we wait just to for good measure? I think, and because it's Trade Talk Tuesday, I think we should look at an Apple chart.
Of course.
Mm-hmm. For good measure, and let's look at what these technicals are telling us.
Okay. Let's pull it up. So here we have is a chart of Apple. Now, of course, you can look at this and be like, okay, hey, like for your traders out there, you're like, okay, hey, 3 black crows. But notice this, we kind of see some of the same behavior here. And then essentially we kind of like traded up back to the top side. So it's like, it sounds like,
I'm sorry, what platform are you on? So people know.
I'm on TradingView just for folks. I mean, I'm using the free version. So this is all the stuff that you get for free using TradingView. So I have like a simple Bollinger Bands at a 20 period move on the top and bottom. And that's pretty much it. So I also have my chart set for year to date. So here we are. And pretty much looking at it on a day calendar, though, that for me, I actually like to look at it on a 4-hour. That I'm just weird like that.
Why do you like that?
I don't know. Because if you notice, like, the market's open for 8 hours. So I like to see how it is, like, what the market looks like from start to lunchtime and then from lunchtime to close.
Okay.
So it's like, it's very easy to look at it. And then if you want to, you can kind of like, have fun looking at the aftermarket activity. But for me, I like to see exactly what the volume looks like on both sides and seeing exactly how we place out. Now, notice here, I kind of tend to notice some trends here for Apple. Like, for example, it's very rare on these periods where it's like, okay, hey, we see this, and then pretty much lull. So here we have 2 red and then of course lull. So I wouldn't be surprised if we have green activity in going towards the open tomorrow. Okay. If everything is of course on target and on trajectory. But I think that what we've done here is we've tested these lows, this low period here, which was a significant level of support. And I think that from here, we probably may trade a little flat, but if not, then I think that where we need to be looking at is we could probably be looking to come back and challenge these highs again. But then when we look at it in the grand scheme of things, we still got a lot of work to do, because if we come all the way back to, let's say, January, we still got a ways to go, because we got to get to this level here. And that's where we're literally looking to challenge. We've challenged that early on, and now we've kind of like come down to this level.
When you say this level, can you say the number? Because it's
yes. So the level of 131.69. So really 131.50, which is, to round it out, or 131. And this dates us back to, let's say, January 29th. And then the last time when we went on that run was, again, we're pretty much at the flat line for the year. So we're pretty much at the starting point of where we started for 2021. So we've gone through the highs, we've gone through the lows, and now we're pretty much at that midline. So this is where decisions need to be made. And I think it's perfect timing, because of the fact that now we're in a place where we start to see, okay, hey, the best time to know exactly where our trajectory is headed is during earnings. And I'm glad that we also have a pickup in volatility at the same time, by the way.
All right, I have a request. One, this is from Tivo. Can you minimize the bottom half of the screen? And then the second request is, can you also show this on a line graph?
Sure. So here we have it on a line chart. So essentially, we're pretty much at where we started for the year. So as you can see, that blue line, that blue dotted line shows you that we're pretty much at the point of start. So again, we've had and notice when Apple first opened for the year, they actually went down at the beginning of the year, and then they picked up. Yeah, so that's something to be said there. I mean, honestly, Apple kind of like has been kind of like trading in this lull period. And I think it's because of the fact that the market is expecting something and it's waiting. Also, the fact that we also had a rebalancing period during this point in time. So essentially, like I said, I think that this is a perfect time, because we're going into the week of earnings. And with that being said, I think that this is brilliant for Apple. Like, I'm really, really excited for what's to come for Apple during its earnings week, because I think that I think that they're going to blow out the whisper number and ultimately start going to challenge those next level of highs, which is again within this range here, which is this mid range, before we can start going up to challenge this. Now, of course, depending on what their earnings is and depending on what their guidance is, then essentially it's like, again, this puts everything here into perspective, or essentially we can come back to potentially challenge this level 130 to about 128.
All right, let's do some what if scenarios. So let's say they, as you predicted, what if they sandbag their guidance, saying, meaning that they're
sandbagging their guidance going into the next quarter is okay, because it's kind of like expected. Apple doesn't really do significantly well during that time period because of the fact that we're preparing for the things to come later on down the pipeline. So I don't think that investors are going to be too hurt about that. Sandbagging their earnings during this period of time is okay. And I think that ultimately if they if they have a significant beat on their earnings, and essentially, like I said, we're going to be going on a pretty swifter run to the upside for Apple. Now, of course, if they miss on either the top or bottom line, then of course, again, that could send Apple downward. If they come in line with what Wall Street has projected, then that can also potentially challenge the stock, because of the fact that people are like, okay, well, what's going on with Apple? But yeah, I think that where we're at right now is we're pretty much at that point where it's time now to show Apple what is it that you got.
Okay.
Yeah.
So is there anything else that the cousins should be thinking about or preparing for as we head into earnings with Apple in mind?
Well, I guess looking at all earnings, because I know people are like asking me like, sandbagging, what does that mean? For my spades players, you definitely know what I mean when I talk about sandbagging, because, it happens. But essentially sandbagging is where you say that, okay, hey, you lower the expectations in your forecast. So you say, okay, hey, we're going to do well, but we're not going to do as exceedingly well. So you're kind of like lowering the expectations for the company and moving forward just for the next quarter or so. So it's kind of like you're weathering everybody's expectations. So that like where everybody tends to get a little bit euphoric, you're like, hey, don't get too euphoric. Settle down. This is going to be kind of like we're going to be on par or either that or a little bit subpar, which means that you're kind of like setting the bar ridiculously low for your success. And then sometimes what you'll see companies do is when they set the low bar, then they come out and just smash the earnings the next quarter, which literally leaves investors thinking like, wait a minute, like was something like miraculous that happened that took place during that quarter? Or were we completely off in our projections, or did they just sandbag? And you see it across the board. You see people sandbag their earnings. Now, sometimes investors don't like that, where you can see that affects the stock negatively in the aftermarket, or say, for example, after they report on earnings. And then in some cases, they just don't care. I think that we're getting into a place where you're starting to see that some investors do care because of the fact that they're looking at, okay, hey, judging this company from 2020, are its best days still ahead of it or is it behind it? And so essentially any negative potential measuring or anything that kind of like weathers an expectation could possibly potentially challenge that thesis as it pertains to the growth.
Okay, y'all. So y'all know what to do now. All right. So now we move into the shady portion of our Tuesday evening.
Shade activated.
That is so funny. Okay, so Netflix. So we know Netflix had earnings. We know that subscriber growth just didn't hit. What was interesting was, last year they said because of COVID and the pandemic, hey, our subscribers gonna increase. And that was good for the company. And they seem to be like, yes, this is great. Now they're blaming the pandemic and saying, no. They missed. Okay. So Q1 2020, they had their highest earnings, or not earnings, but they had their highest subscriber growth. I think it was like 15.8 million or so new subscribers. This time around, they claimed it was going to be 6 and they missed. So we saw the dippage and the slippage. And some of y'all that are in there, I don't even know who's in Netflix, because we got some XLC holders. I don't know. We need to look at some charts, and we need to talk about Netflix in the context of the future. Can we talk about that?
We're family here, right? So we can just sit down and have a candid conversation. And I think it's now time that we start having the talk. I think it's time to start having the talk.
Oh, Lord.
So
right, let me set up.
Yeah, it's time that we have the talk, because here's the deal. When looking at Netflix, I see a company that has completely disrupted an entire industry. Goodbye Blockbuster, goodbye Hollywood Video, and Redbox. Who cares? And they did a fantastic job. But my grandfather always taught me something. Never let your cockiness supersede your talent. And I'm not gonna quite claim that they're cocky right now.
Okay.
But I am going to say that there are some problems here. And so I don't know if anybody remembers that, but I did talk about in the end of last year, I said, be very, very careful. A lot of these companies that have done exceedingly well during 2020, you have to ask yourself this question. Now, as a trader, that's a totally different ballgame. Like, we have Netflix on our conviction list, and yeah, we actually placed it there. And if you were in Netflix this year, then you saw Netflix also go for a pretty decent run this year. So kudos to you if you did that, and ultimately you cashed out before earnings because you didn't want to play it. But here's the problem. We started seeing subscriber growth slow down since Q1 of 2020. And even before 2020, we were seeing subscriber growth slow down domestically, but then they were like, well, we'll pick up the chain and, worldwide. I even drank the Kool-Aid and said, yeah, they'll do that worldwide. And then we started seeing the behavior. And right now it's like, I'm like the parent that's sitting out and saying I'm sitting there in church and, looking at my child. And your child just showed out, and then you just give them the look and they already know what's about to happen when they get home. Mm-hmm. That's how Netflix and I are right now. Because one, Netflix has had a ton of opportunities to literally go beyond just doing movies and TV shows. They tried it with Chelsea Handler. It failed. They tried it with a few other shows. I don't know why, but I don't know. They just didn't read the room. But looking forward at Netflix, here are some things in which that you could have done. This is my letter to Netflix. So if anybody wants to send this out to Reed Hastings, and don't worry, Reed Hastings is a heck of a CEO and chairman of Netflix. He does a great job. But at the same token, no CEO is without critique. So, dear Reed Hastings or dear Netflix, you have a problem. And here is your problem. You have Disney that's nipping at your heels, though that their content is getting a little bit stale because of the fact that they're leading off of nostalgia. But then you also have HBO Max, which is doing all these fantastic releases. Shout outs to Mortal Kombat that comes out on Friday. And on top of that, you also have Apple TV that's also starting to wake up also, but it's giving you a little bit of time. But then you also have Amazon Prime Video that's also right there in your backyard. And it's kind of interesting that you allowed them in your backyard since you were using AWS. And the next thing you know, they turned around and created a product off of learning from you. And so here we find ourselves where it's like you've acquired all this content. You have this rich library and you continuously can keep investing into comedy shows as if everybody wants to watch stand-up comedy, because after a while, it just all becomes the same thing. But here are some things in which that you miss. Like, think about it. Microsoft just came out with the Xbox Game Pass, and there's a few other streaming gaming platforms out there. You missed out on esports. You missed out on sports, period, because of the fact that you could have taken it live, or you could have just done like shows, like, for example, working with LeBron James or The Uninterrupted or whatever you have to ultimately increase that distribution channel. Then on top of that, you could have also, say, for example, got into the gaming space, whether people just wanted to watch it for esports, or essentially you can actually allow a gaming streaming platform. Then the biggest thing that you missed out on, which is, we're talking about revenue here, the biggest thing that you missed out on was merchandise sales. You could have had folks buying merchandise on your platform. And each one of these is a missed opportunity. Now, of course, your earnings, you beat on the earnings per share. You came in line in your revenue. So you beat on the top and bottom line. But then when it came down to the thing that mattered, where everybody kind of like judges you, is really in your subscriber growth. Now, of course, it's like you kind of deemed it that way because of the fact that, honestly, what other metrics do you have? You can look at all the acquisition that you're doing in Africa. You can look at the acquisitions that you've done in India, Korea, and all these other places. You spent a lot of money. You spent a lot of capital. But then at the same token, you haven't been able to find out a strategy to be able to turn folks who have one Netflix account, but then they share it off to like 50 different other people. So you're missing out on that revenue. And then on top of that, you haven't really given a strong value proposition outside of the content that you already have, in which that, like, for example, losing places like The Office, which now goes over to Peacock services. It's kind of like, where is your value proposition in which that you're ultimately putting something there in which that ultimately that you literally separate yourself from other players? Because right now it's like, if you think about it, it's just like, okay, hey, you're just yet again another subscription service that somebody pays for. Now, of course, it's like it's hard for people to come out of their subscriptions because like people are stubborn. But it's like we got to get to this point where we start looking at, okay, hey, has Netflix reached this point in the S curve of innovation where it's like, okay, hey, now you've peaked. Have you peaked? Is 2020 your best numbers that you can provide? And to sit there and say that, okay, hey, that you're not competing against other streaming platforms, you're competing against the cable companies. I'm sorry, I'm going to call cap. You are capping just as much as this cap that sits on my head. It's time now that we start having this conversation and we start being honest with ourselves and really start looking at it and saying, you know what? Maybe we could do better. Maybe we can do things. Now, as it pertains to the gaming thing, you've already missed that boat because there's so many gaming streaming services out there. But honestly, here's my thing. If Netflix can't get it together and come up with that one thing, which is one more thing, which can improve its value proposition, I can't believe that I'm saying that. And I've been doing a lot of spoilers and I told TiVo I wouldn't do this, but honestly, I've already did it. So I may as well tell it to the people. If Netflix can't get it together, then ultimately Netflix will become an acquisition target. And who might those acquisition targets be? I'll tell you. It could be Apple because Apple's got $200 billion, though that Netflix is sitting there at a $243 billion valuation, I think, in market cap. I don't believe that. And I think that when it starts coming of you chopping up assets and everything else, I don't know if it's worth that much. I think that ultimately Apple acquiring you for 92 to 105 billion and, a mixture of cash and stock, I mean, that would be a fair value. That'd be a fair value acquisition. And then ultimately Apple TV Plus just goes on a run. Or you can just give it off to Amazon and ultimately merge with Amazon. You've got that one. You've got Google, but honestly, Google, they kind of matches that along with Google Stadia, maybe. And then on top of that, you have the other players, for example, Disney or HBO Max. What you should have done is maybe even acquired Showtime. Because imagine watching Billions along with watching maybe The Witcher or Stranger Things, which I don't really watch, but I mean, I definitely watch Billions. But providing that content library that you now actually own, and now you can actually have syndicated content throughout the week or on the weekends, which means that you have Friday, Saturday, Sunday. See, these are just basic things as it pertains to thinking about innovation. But since you're not thinking about that, then you've now peaked. And now it's okay, well, now investors are sitting back and saying, I could play that to a 495 over the next 6 months for a contract. But then at the same token, it's really, where's the longevity? Where's the long-term value? Because you're burning more cash than ultimately you're probably bringing in. And that's a problem. And honestly, at that point, I'm sorry, I can't give Netflix any more time. And I for dang sure can't give them any time on the chart because they don't deserve it. I think that you have everything that came to you as it pertains to dropping by about 10% in the aftermarket. I think that there could be some pain ahead as it pertains to the short term. But I'm not telling anybody to go out there and short the stock or anything like that. That's not my forte. That's not my thing. I'm just saying that right now, you need to figure out what your identity is and ultimately figure out exactly how is that you can prepare yourself for the future, because this right now ain't it. If you have a site or if you have a platform, and the thing is, here's the other part. You even allow Roku to step into your space and ultimately start dominating. You know what? I'm done with this. This lamb has been slaughtered. Let's move on to the next one.
Dang! It smells hella charred. Hella charred. Oh my gosh. What is that? Bacon? No, I'm just kidding.
Throw it away.
So the thought of a giant, like Netflix being acquired, I think that's something that we get used to, because at this point, at the rate that technology is going in innovation, it is time we're going to see consolidation. We're going to see the real giants, just all the pie bakers, they're cleaning the plate, and if there's scraps, they're going to be gone and they're going to be distributed, repackaged, reimagined. And Mark, everything that you said as far as all those missed opportunities, it was just like a dagger, dang, because the merch definitely would have been lit. All those shows that people heavily identify with, that would have been.
Yo, I could have finished Netflix in the next two sentences, but I'm gonna leave it alone. I'm gonna move on.
Let them have a little something left.
I'm gonna let them breathe. But I'm gonna tell you this: if I see the same thing that I see from Netflix coming out from quarter in the next quarter,
Mm-hmm.
I'm just gonna let it be known. Netflix has got one quarter. They're put on notice.
Then we do need to have like a out of
Or there will be a reshuffling.
right, but we need to have something on the SIPs that's like, okay, these ones are on potential,
Yeah.
block. They're on probation, and we gonna see. Dang, Netflix, you just had to do it or not do it, I guess.
But let's look at the road ahead, because honestly, it's like, yo, they beat on, like I said, they beat on the top and bottom line, but they couldn't even, like, yo, when it came to that whisper, it's like, shh.
It was like
not a sound. All right, so we got a little bit of time left, and I want to prepare our cousins for what's to come down the pipeline, because we won't be able to have a hot take Thursday because we have a special guest on Thursday. So I think that's going to be dope. And so let's prepare you a little bit for earnings that's coming next week, because of course we got some pretty heavy hitters that are coming through next week. For example, so let's set some expectation guidelines. Okay. So when we look at, let's say, AMD, right? AMD has been a hot topic this year because of the fact of, honestly, we have chip shortage. So a lot of the chip companies outside of infrastructure-based semiconductor companies have been taking a huge hit. Now, of course, Netflix, of course, NVIDIA has come forth and literally like shine bright so far because they had their developer conference. I think that AMD definitely needs to start having that. Lisa Sue, there's a little piece of advice. You need to actually start having conferences where you give keynote conversations. Though that she's going to be doing one in Computex,
but
that's
going to be their own would be big too.
To have your own is like, that's really big, because it really starts to show exactly what type of groundbreaking things that you're doing with your technology. So that's just something there. If Lisa Sue and her people want to hear that, I don't know if you watched the Come Up series or not, but I sent you the invite, but you didn't answer. But it would be interesting for that. I would be on the lookout for that, but just know that their guidance should guide us to a better second half of the year and going into 2022. You're going to have a great run for AMD, probably coming on the back leg because of the fact that we should start seeing some of those chip shortages start to subside. I would say this for anybody out there: it hasn't rained in Taiwan in quite some time. You may want to actually add on your weather app to see exactly if it's raining in Taiwan, because a vast portion of making those semi chips has to do with water. So, put that on, maybe on your radar. It's funny when you start looking at weather, you start to see exactly how much it has impact. Like, for example, if you could predict the temperature, you could predict the price of oil. Just small economic things. So I think that they're going to do well. I think that more so is just going to come in pretty much in line, though that they could come out with a surprise and beat it either on the top and bottom line, but just really be on the lookout for their guidance. Same thing with NVIDIA, though that's later on down the road. We already talked about Apple's earnings. Go ahead, Jolene.
Yeah. Reggie wanted to know, where do we find the Whisper earnings numbers?
Really start looking at places like Refinitiv as well as Estimize, and really look for those high numbers. Look for the high numbers and where you see those guidance, or where you look at the estimates. And that's where you'll probably see where those Whisper numbers are. And also you can look at, I think it's also FactSet as well. So you can try your luck there. And then on top of that, just, look at and compare that towards their guidance, by the way. Compare that towards their guidance from a previous quarter that they gave. So hold them accountable to what they say previously and see how they're doing now. I think Amazon also reports next week. So I'd expect nothing less from Amazon. I think that they're going to do well, especially their cloud service infrastructure is just humming like a bird. I think that Microsoft also may be reporting next week, if I'm correct. I think that they should be doing well. Okay. Yeah, so they report. I think that expect big things coming out of Microsoft, especially since they're going to be very, very excited for their cloud gaming service. So that way you can play it on both iOS and Android now. So that should be interesting, because that opens up a whole new model for Microsoft, especially for their subscription. I would also be looking at Tesla. I mean, we've already heard that they crushed it on the delivery numbers, so we can kind of get an idea there of where they're at, but really look at where their energy sectors are doing and how is it that they're doing well on that side of the business, and also getting a trajectory of where they are. But honestly, I think that they're going to do very, very well. It's just a matter of like, okay, hey, they've already beat the delivery number for the Whisper. So, read the room. I just think that when we look at, tech across the board, I think that, looking forward at any of these companies, they've been beaten up so heavy and many of them have reached their baseline for the year. So now that they've actually finally reached back up to their baseline, then now the only thing that can stop them is themselves. But honestly, I don't think that they're going to be stopping. I think that they're going to just keep going. So I think that we should expect solid earnings beats across the board within the tech sector. Now, the beautiful thing is I think I said this last week. I said, don't be surprised if you see that the volatility starts to spike up going into earnings, which is a good thing because you want the volatility to spike, because if you see the volatility spike, you can see that in price swings for your traders. And then on top of that, you see better price action and price movement in the process. Now, know this, a lot of folks are like, well, Mark, that doesn't make any sense. Well, remember this. Tech really led the entire market last year, and the volatility was significantly high. We were trading in like the 40s and 30s, and yet tech was doing well. Now we're trading in the teens, and tech is not doing so well. Now we're starting to see the volatility spring up. I wouldn't be surprised if I start seeing some decent price action hit for a lot of your tech sector stocks and consumer discretionary.
All right. So we also have CRISPR reporting on Monday.
Yep.
Tesla is Tuesday. Microsoft is Tuesday. No, I'm sorry. Tesla is Monday. And we have Microsoft on 4/27. AMD on 4/27. With that,
also, you should also be having Google and Facebook that week also.
Yeah.
So, I mean, you're also going to have them do well. I mean, really just look for their ad spend to see if small businesses and startups also help propel them. And also, if you see bumps in, say, for example, their revenues, then that can also give you an indicator that you probably are seeing larger businesses. They're now starting to come back to advertise now. They're just advertising differently.
Okay.
Yeah.
Hold on, I'm checking in with the comments here. They're just being hilarious.
Somebody wants to know about IV and IV crush. So essentially implied volatility is spike based upon interest rates and everything else. So you see spikes in volatility. I think that ultimately now that we're seeing in the volatility index, so the VIX, that's what I'm really looking at. So you're seeing the VIX ultimately start to climb. With the VIX, when you see volatility, that means that ultimately you can see price swings. And with price swings, that can also increase on price, or it can also be also unforgiving when it comes to price, when it comes to movement to the downside. So it can either work either way, just depending on exactly how the stock itself moves. Essentially, when we look at it from the IV standpoint, of course, the higher the IV, you typically see that around earnings. So you're going to see a higher implied volatility going in, and that just lets you know exactly the call to put ratio that's going in. And you can kind of look at the same thing as the VIX. That's where they kind of like similar. But if you see a lot of, say, for example, buying of, say, for example, those calls, and that lets you know that you will probably start to see the IV, the implied volatility start to increase. So which means that you're seeing a lot of folks that are literally using, say, for example, the bond market to cover, but yet it lets you know that they're covering so that way they can ultimately go for riskier play. So I wouldn't be surprised if you start seeing Wall Street go a little bit more risk on as we move forward into earnings.
Well, it's about that time.
No.
Right on the dot.
So, y'all, I guess to leave you with some final words, honestly, challenge every single thesis in which that you have for a company. It's easy to become an immediate cheerleader for a company. And that's one of the reasons why I think that many of you go through these process of doing bear case and bull case. But it's really look at it with a fine tooth comb and look at it from the standpoint of hey, does this really cancel this out or does it not? And then like really like sometimes what I do just as a little cheat sheet, sometimes what I'll do is I'll write the good things about the company and I'll write the bad things about the company. And I sometimes write the risk and I'll write the reward. And so when I look at the bad things, I'll look at, okay, hey, how does this affect the consequence? How does this affect consequences and reward? If the bad ultimately if the bad seems more likely than, say, for example, the good, then ultimately I have to cross out that one point that ultimately like competes against the other. And then really what I do is I run a tally just to see exactly like where am I at in the forecast of like the bad versus the good. And that really helps mold and shape my thesis as it pertains to where I'm at. And it really helps me stay very objective when it comes to looking at many of these companies with a fine-tooth comb. Honestly, I always look at it like this. If we look at sports and say that your record is what you say that you are, then we can say the same things for companies. Your earnings will say who or what you are. So if we say that, okay, hey, that you have strong earnings growth and we have strong full year guidance or positive outlook, then that's a good thing. But if we're seeing signs of weakness within your earnings and you're just barely like making it across the finish line, that's a problem. And so I always give a company like a 2-quarter, benefit of the doubt. But we're at this point where sometimes you just have to look at companies and say, man, where's the future at? And that's where it's just like where the sense gets common. like for real, the sense just gets common. And at that point, you just got to make the objective decision and remove all feelings aside. Remember this, there is no such thing where you cannot include feelings with money. They just don't go well. If you're making decisions with your money based upon your feelings, then honestly, that's a no-go. Make sure that the data itself validates exactly where is it that your money is going. If the data does not validate it, where it's like, okay, hey, these things are concrete, or I have enough concrete data that guides me there, then ultimately it's a no-go. Like you have to have a go or no-go process. If you don't have that, then honestly, you're just whistling in the wind and you'll just be whispering quiet, just like, a company that we just discussed today.
Can't even look at a chart. Can't even pull up a chart. All right. Well, that's Trade Talk Tuesday, y'all.
Y'all, thank you for rocking with us. So on Thursday, we have a special guest, Anthony Chikamba from Loop Capital. So if you don't know who Anthony is, I mean, you may want to go just Google him. Just Anthony Chikamba. He is a managing director at Loop Capital. So you probably may have seen him on a CNBC, show here and there. And we get to talk about something and we'll probably geek out, and we may even invite a big cousin here with us to come and geek out with us to discuss and to talk about something, not only just about like maybe even tech and geek out there, but we may even be able to talk about some other things like, for example, retail and other sectors, and get to know those things just as well as just getting to know how things work on the institutional side and getting more perspective for each and every single one of you. So stay tuned for Thursday. We're excited, and I will do better as, setting on IG or Twitter, letting folks know what I'm doing at Twitter Spaces to have fireside chats.
Have at it. Take up all the Twitter space you want. Take it all up.
I could have fired off on a Clubhouse today, but I'll leave that alone for another day.
Oh man, you could have, because their downloads abysmal.
I'm just gonna say it's amazing when you turn down a $4 billion acquisition offer, and then at the same time that you turn it down, then the wolves start to see exactly like what you really made out of.
They should have took it. Okay, well, anyway, I don't want to keep the show going because I have rings to close. Okay.
Good luck on closing all 3 of your rings, and to all the cousins, good luck to each and every single one of you. I'm about to probably go kick it with my wife and my nieces and also get some rest. I will see you all on Thursday. Thank you for rocking with us. We love y'all. Have a great day. Until next time, I'm Mark Monroe.
I'm Jolene GC, in the place to be.
And this was your come up on Trade Talk Tuesday. We'll see you on Thursday for a cookout. Peace, y'all.